Welcome back to another episode. Today, we're going to take a closer look at Nvidia and some recent updates of the AI market. We're going to start off with more bearish sentiments that could be impacting Nvidia in general. After that, I want to take a closer look at just some recent market updates. And finally, I want to end this episode with some nice bullish news, in my opinion, for Nvidia and the AI space. So let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So the first thing I mentioned is we're going to see some bearish sentiments toward the stock. When I woke up this morning, I end up hearing that some investor, Stanley Druckenmiller, cut his Nvidia stake in late March and says that AI may be a bit overhyped in the short term. So first, normally I don't necessarily follow any form of analyst, but in this article, they do mention that, hey, look, he slashed his bet in Nvidia earlier this year, more around March. But one quote from him comes out and says, look, I didn't even know how to spell it. I'm guessing Nvidia. Drunkenmiller said, I bought it, then a month later, ChatGPT happened. Even an old guy like me could figure out, okay, what that meant, so I increased the position substantially. He also does mention, so AI might be a little bit overhyped now, but underhyped in the long term. So while I do agree with this analyst that, hey, look, AI might be a little bit overhyped in the short term, where many investors might be expecting a lot more in the short term, in the long term, I do believe AI will change the overall world and the way some stocks do business. Now, what I didn't like is it seems like based on this quote, Drunken Miller really kind of just got lucky to some extent. He got lucky. He bought before ChatGPT, and then he was like, hey, look, let me just double down, triple down, quadruple down from here. So based on that, I personally, as a long-term investor, could, no disrespect, care less what's happening here and with this investor. Just as you can get lucky one way, you can get unlucky the other way, and you can be wrong in the current sentiment. At the same time, most of us, like me, I'm a long-term investor, so I'm willing to ride the wave where I don't believe I'm a perma bull of Nvidia. I believe in the short term we can see a lot of volatility, but in the long term, I do believe that Nvidia will be at a bigger company than it is right now. Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode. Now, the second bearish point that we saw for Nvidia is we have heard that Apple is reportedly developing their own custom data center processor with the focus on AI inferencing. And this is something that many people are fearing as big tech kind of creates their own solutions, AI chip solutions. I Again, wouldn't be too worried because one, if it is more of an AI accelerator, it's going to be more of an ASIC solution, and it's only going to be good for one single thing. So at the end of the day, if Apple is trying to train some crazy AI market, they're going to need NVIDIA chips. There's no doubt about it. If you don't have NVIDIA chips, you're going to be left behind. Now, like I mentioned, AI accelerators, we've seen all the big players do this, but AI accelerators in the ASIC market are only usually good for one thing. So I wouldn't be bearish on NVIDIA if this is true. Now, where I personally believe this is going to go into is more as what Google recently did. So Google recently announced their ARM-based CPU, Google Axion. So Google Axion is their first custom ARM-based CPU designed for data center. And it's going to be end up using it for maybe some form of AI acceleration here and there, opposed to just using AI accelerators. Now, the reason Google has done this is because they have found that the rate of CPU improvements has slowed down recently. So Google is saying, hey, look, all these other players that are creating server CPUs, they're not growing their performance as fast as we need to, so we might as well build it in-house. Well, we know that Apple has done the same thing with their processors for their phones, for their laptops. They went to Intel and said, hey, look, you're not improving fast enough, so we're going to do it our own. So I'm going to guess that more than likely this custom data center processor is more, if it's true, it's going to be more of a CPU to help offset some of the solutions some of the workloads. As we know, Apple is really strong with creating CPU solutions. I mean, most recently, they did announce their N4 chip that's going to power some of their new upcoming products. And within here, they do have some form of AI workloads. They mentioned that the M4 is capable for about 38 tops, which is what's used to perform, to calculate or to view the performance of an AI chip. Unfortunately, M4 doesn't give us in what kind of bit. It does it as a FP8, FP16, and the list goes on and on, and what floating point that tops is, and that it's really important. Overall, though, it does show that Apple is a big chip company, and they are definitely a great player in the CPU market. I would be more worried about CPU players opposed to GPU players at the moment if this is true. Now, I want to take a closer look at more just overall updates impacting the AI space that might not necessarily be things that could move the stock price, but it just showcases where the AI space is going. So there are reports that self-driving startup Wave just raised $1 billion from Nvidia, SoftBank, and other big tech players. So this tells me that, hey, look, autonomous driving to some extent is probably here within the next 5 to 10 years, and we're seeing big companies invest in that, and that obviously bodes well for AI chips, AI computation. Now, the other thing that we saw is the United States government is obviously focusing in generative AI for most likely different aspects like climate science, healthcare, and cybersecurity. Well, there's this nonprofit government group, MITRE. I think we've talked about it in previous episodes, which is a White House executive order. And they mentioned that they're going to be using an NVIDIA DGX SuperPod to power the US government generative AI. So it doesn't, I don't think this is necessarily going to move the stock, but it does showcase that, hey, look, now the United States government is really building on NVIDIA ecosystem. And probably as they continue to get more projects, more military projects, more all types of healthcare, science projects for the AI space, we're most likely going to continue to see money and funding go to Nvidia. Now, we also have another report that Nvidia is kind of a alphabet company, Google company that deals with robotics, kind of grasp or these arm robotics, is using Nvidia's AI ISIC manipulator, NVIDIA's AI software solution. So nothing that, in my opinion, would run that would run the stock price, but it just showcased that, hey, look, if you want to focus in the robotics market, you're gonna need to end up using NVIDIA's AI software solutions and most likely NVIDIA's chips. So now that we have that, I think we can move on to some bullish news. And for bullish news, we do have Goldman Sachs adjust their price target to Nvidia to 1,100 from $1,000 and keeps a buy rating. Just reminder, Nvidia is now sitting at around $900. Now, the other thing that we are seeing in the overall market is some people might be wondering, hey, Jose, in the semiconductor space, I'm hearing a lot of bearish points, especially maybe some of those companies in the automotive space. How does that deal with Nvidia? And right now, the semiconductor space is seeing a huge inventory correction in mature process nodes. And just a quick refresh, mature processors are used for more not the AI chips in general. So this might give us buying opportunities in other companies that deal with mature plays, but not in companies like Nvidia that deal with AI chips and deal with advanced process. So right now, this huge over inventory is kind of causing foundries to have some pricing pressure on those mature processors. And again, I do believe this is probably the time when we should really start looking at mature companies. We've talked a little bit about some of them dealing in the automotive, in the EV space, but just want to remind investors that mature process doesn't really impact much the AI market. Now, some other great news is there are reports that OpenAI is readying a search product to rival Google. And obviously, OpenAI, big user of NVIDIA chips. So if they are creating more solutions, obviously they're going to need more computational power. The other thing is the big wallet of OpenAI, Microsoft, is also designing a stronger in-house model, MAI-1, which is a model with over 500 billion parameters. This kind of focus of in-house large language models is being boosted by Mustafa Suleiman, who is the former Google AI leader and who's previously served as CEO of Inflection AI before becoming part of Microsoft. So again, we're seeing not Microsoft only doing OpenAI, but also creating in-house large language models. 500 billion parameters is a big amount. So it does bode well for computation, for inferencing, for training, and obviously AI chips, AI software, and great news for Nvidia. Now, I want to say the final overall market news that could be bode well for Nvidia is we are seeing HBM prices continue to increase in 2025. HBM is the type of memory that's used on AI chips. So if you're expecting to see an increased price in this, the more likely is there's more demand than there is supply. If there is more demand than there is supply, it does mean that AI chips to some extent are limited, and Nvidia definitely is going to continue to hold a great market share and will be able to continue to be in a demand in a supply dominate not a supply in a demand dominated market. So we're going to continue to most likely see strong high margins from Nvidia's AI chips, and we're going to continue to see Nvidia improve those margins, improve that revenue as they are improving their supply chains overall. So just a quick update here on Nvidia. I hope you guys enjoyed it. I think we covered a lot. If you made it this far, make sure to hit the thumbs up and the subscribe button. Take care. See you all next time.